Hi everyone! Did you know that learning basic accounting is easy? Others are thinking that it's all about math, but actually, accounting is focused more on analyzing business transactions. Whether you become a future employee, a manager, or a business owner, accounting is important to determine the income and the expenses incurred by the business. This will determine if the business is gaining profit or experiencing loss in their operations. Accounting equation is the basic formula that you need to remember in studying accounting. It is where the assets is equals to liabilities plus owner equity. Now, let's define each of those. Assets is anything of value that the business owns. It includes products that the business already produce, their inventory of raw materials, the land and building where the business established, the equipment and tools, the truck that they use to deliver their products, and other things that the business owns. Next is liabilities. It refers to the value that the business owed. It includes cash loan from the bank, a car loan, or supplies that you bought for your business but are not yet paid. So it means that the business should pay for their liabilities on a future date. So again, the difference between assets and liabilities is that asset is what the business owns, while liabilities is what the business owns. Now let's define what is equity. Equity is basically the difference between the business assets and liabilities. Let's say if a micro business has an asset value of 100,000 pesos, but it has a liability amounting to 60,000 pesos. Therefore, its equity is amounting to 40,000 pesos. Again, equity is basically the difference between the asset and liabilities. So what's the use of this information to others? For example, if the equity is low and liabilities is high, then it means that the operations of the business is financed more by its debt. So if you are an investor and you see this figure that there is low equity and high liabilities, then you can decide not to invest on this business because it is considered as a risky business. To sum up the first part of the discussion, remember that accounting is considered as a language of the business. It is considered as a language because it conveys a message to different users that includes managers, investors, suppliers, and even bankers to decide on financial or business matters. Now that you already understand the accounting equation wherein assets is equals to liabilities plus equity, it is also important to know the common accounting terminologies used in recording business transactions. First accounting term is accounts receivable. It is where a business is giving a product or service to a customer on account. When you say on account, it means that the customer is going to pay a product or service on a later date. For example, one owns a sari-sari store in his barangay. His customer Nena buy canned goods and other items from his store. Nena asks Juan if she can just pay the items she bought when she already received her salary. Juan agreed on it and created a record on the said transaction. So basically, what you have heard is considered as an account receivable where you're giving product to a customer on account. In addition, remember that collecting accounts receivable is important to any businesses because if the cash is not collected, the business can't able to pay its operating expenses and its liabilities. Second accounting term is accounts payable. It is where a business has an obligation to pay another business on a later date for the products or services they acquired. For example, one sari-sari store gets their soda products from their supplier. Once the soda products were delivered by their supplier, one sari-sari store will pay their supplier after 10 days based on their terms of payment. This business transaction where one sari-sari store paying the soda products on a later date is accounts payable. In addition to that, also remember that not paying the accounts payable on time will lead to having a bad image to the creditors. This may lead to penalties or low credit rating that will affect the future borrowings of the business from different creditors and suppliers. The third accounting term is equipment. This account includes machines in producing products or machines for rendering services. For example, let's say Miss Nina decided to establish her own food stall business. Since she will sell fried products, she needs to have a stove and pan for her products to be cooked. Remember, equipment differs depending on the nature of the business. If a business is a printing business, printer is their primary equipment. If a business is a photo and video shop, then the primary equipment of their business are their cameras. The fourth accounting term is furniture and fixture. This account includes tables, chairs, bookcases, desks, and built-in cabinets. To illustrate, let's say Miss Santos will build her salon business. Since it is a salon business, which is considered a service business, customers need a waiting area before they can have their turn. That's why Miss Santos decided to buy a sofa set for her salon business. Fifth accounting term is office supplies. This account includes bond paper, ink, pen and pencils, scissors, tape, folders, and more. This is important to manage and organize documents, files, and reports of a business. Imagine if there are no supplies, documents, or files will just be scattered in the area. That's why it is important to have an office supplies. Sixth accounting term is revenue. This is used when the product or service of a business is purchased by the customers. Let's say Mr. Park owns a store that sells gadgets like cell phone, speakers, and more. When a customer buy any gadget from his store, the account that is recorded in his journal is revenue. This is one of the important accounts since it's all about the inflow of cash in a business. Having enough cash is essential to pay for the different operational expenses of a business. These expenses include the rent, salary, utilities, repair and maintenance, and advertising. Remember that the business will eventually close if customers will not buy products from the business. Now let's proceed with the seventh accounting term, which is utilities expense. It is where a business pays for their operational expenses, which include water, electricity, telephone, and internet connection. Remember that utilities are important for the equipment or machines of the business to function. Without this, the business can able to produce their product or execute their services. The eighth accounting term is called the prepaid rent. It is where a business pays an advance deposit for its rental. For example, Mr. Cruz decided to establish his own business in a place where there are high traffic of people. He decided to rent a commercial space, but he needs to pay 3 months of advance deposit to the lessor before he can start using the space. Remember, prepaid rent is considered as an asset because you can use the advance deposit to pay for your rent in case you lack of cash or budget. Another term is the salary expense. It is the account where we recognize the payment of the business to its employees. Remember that normally businesses are paying their employees every 15th or last day of the month. The reason why it is given on a certain date is because the companies need to process and determine the number of working hours that the employees work and compute for their salary. Again, that is salary expense. The next accounting term is the repair and maintenance expense. It is the expenses incurred by the business to ensure that all their equipment are working properly and ensuring that their store are in good shape. Remember, customers always see the beauty in the store. That's why the business owner should continue to maintain the goodness and cleanliness of the store. Repair and maintenance is also a good activity to prolong the use of machines and other furnitures in a business so that the operations will not be hindered and sales will continue to generate. Now let's proceed to the next accounting term, which is depreciation expense. This depreciation expense is an account used in accounting that describes the decrease of value of the business assets. To illustrate, let's say Mr. Villanueva bought a vehicle worth 700,000 pesos for his delivery business. After 5 years of using the vehicle, the value now decreased to only 300,000 pesos. This is because all the parts of the vehicle are already 5-year old and it is already tear and worn because of the continuous usage of the vehicle. The last accounting term that I'm going to share to you is the what we call advertising expense. This advertising expense is an account where the expenses in terms of promoting the product through having ads in television, radio, posters, and social media are being accounted. Remember, this being done by the businesses to ensure that their customers will know and accept their products. So again, our last accounting term is advertising expense. Just to sum up, what we had discussed today are the following accounting terminologies: accounts receivable, accounts payable, equipment, furniture and fixture, office supplies, revenue, utilities expense, prepaid rent, salary expense, repair and maintenance expense, depreciation expense, and advertising expense. That's all, students, and thank you for watching. I hope that you have learned many things about accounting today.